Welcome to the Startup Grind.
Awesome. Thank you,
Thanks.
Mike.
Thanks
Yeah.
for being here.
Thank you.
Yeah.
It's always a pleasure.
Thank you.
I love the word startup grind, because the grind piece is, the resilience and persistence that's required
Yes.
for any
It's never easy.
entrepreneur. It is never easy, and it's also actually humbling to be here in this setting and OfferUp, because I met with Nick, who's the CEO founder, several times when he was getting this
Sure.
opportunity started, and it was an audacious, ambitious project, but he was trying to convince us to invest millions of dollars when he had like a couple hundred
Exactly.
users,
Customers.
right?
Yeah.
And what I underestimated was Nick's persistence, in
Most
making
people
that
do.
happen, because it was a business model that's predicated on conquering neighborhood by neighborhood, getting density of sellers and buyers, and it's like, oh my God, you got 200 people in Madrona and Magnolia,
Exactly. Yeah.
and talking about a world domination strategy.
Yeah, you weren't the only one that missed that one.
Oh yeah. So this is definitely on my anti-portfolio list, for sure.
That's a good question, Bill. Like your anti-portfolio list, because I mean your job is to identify deals. Obviously, you don't have a crystal ball, as you've just explained, right? How do you know, like, and how many years have you been a VC? I mean, you've been a VC. Well, you've been operator.
My history in the Seattle entrepreneurial community dates back to 1988 when I did my first startup. So I spent 18 years doing my own startups, and then joined DFJ now 10 years ago, initially as a venture partner, now as a general partner for the last 4 years. So over that time frame, I've been involved with over 25 successful startups, a lot more that weren't. We won't talk about those, but I've seen this community grow. It's another reason why I love doing these things, because I know when I started out as an entrepreneur in '88, I didn't know what I was doing. And there were a couple of groups in the Seattle area back then. Back then it was the MIT Venture Forum,
Sure.
right? Was kind of the
Enwin.
place. Enwin was around, yeah, exactly. And those were the places where entrepreneurs came together and kind of learned from each other and did a little therapy, and yeah.
And how do you now that you've obviously been fairly experienced, like what are the things you're like? Here's a couple things that are just required from from your standpoint, from a Bill standpoint. Like what are the things like you look for? Like we talked about a couple companies we were.
So first of all, you have to appreciate that all venture capitalists make more mistakes than they make good decisions, right? Both in the terms of the deals they turn down and the deals they support. Even the deals we support, many of them fail. In fact, the majority of them fail. So it's not like we have some crystal ball, but we're trying to use kind of experience and filters and now increasingly data to understand which companies we should back. I think the thing that has always universally resonated with me as an operator, the companies that I've been involved with that tended to do well assembled amazing teams. Yeah, and so my litmus test is really understanding the team and what has the CEO been able to attract and inspire individuals to join their cause. I'll use a recent example. We announced a couple weeks ago, three weeks ago or so, that we backed a team called, at Zelf, and they're building a digital care platform that allows physicians and clinicians to prescribe digital healthcare offerings from within their core EHR and EMR system. But this is a team that I got to know as an angel 10 years ago or more when I helped put together a company called Swipe, which innovated on the text entry.
Is that what is SWYP?
YPE, right? And they do nothing about healthcare, right? They've spent 18 months now at Providence Learning, but this is a team that just really executed exceptionally well. So we're excited to partner with them, and it was a team I knew that they could attract amazing talent. Of the first 11 employees, 10 were ex-Swipe, and basically the entire senior management team. So it's like, okay, well, got to do this one, right? So definitely team.
And when you're like evaluating a new CEO, like assuming
first time CEO, right? Sure, yeah.
How hard is that to like know, like?
Well, I would say yeah, it's a great question because that's probably the area that we miss on the most. It's that you're backing this CEO and you hope that they can level up from, because being a CEO is just super hard, okay? I mean, you gotta provide the vision, the strategy, you gotta be the motive force behind all the execution, you gotta be an amazing recruiter, you gotta be the lead salesperson, you gotta be fundraising. It's just a crazy number of things and skill sets that are drawn on, and it's super difficult to assess a first-time entrepreneur whether they're going to get there or not. And I would say that my personal batting average is maybe 50%, something like that. But I always have the conversation with the entrepreneur. Okay, like a first-time entrepreneur, you do want to be wealthy or a king,
Yeah.
right? I mean, so like if the business requires that a different leader come into this business, or you're gonna be kicking and screaming, or you say, yeah, absolutely, I'll find the right place within the organization. So, but super hard. It's probably the number one reason why we as VCs aren't prescient and have 100% hit rate.
Because when you have no track record to look back on, it's really tough to place bets. Right?
Yeah, exactly.
And when you're meeting people, because I know you do. I mean, I know you're a guy that does a lot of coffee meetings and meets a lot of entrepreneurs. When you're doing that and you're sitting across from a first-time entrepreneur, like, what are you telling that person when they're asking? Many of them are probably asking, like, hey, how do I get you to write me a check? Right?
Yeah.
Right?
Some variants on that.
Some
right?
variant of that. Like
lots of different ways of phrasing it. Yeah.
What is the thing you're telling them? Like, what is the advice? Like, if I walk up to you and we have coffee next week, what are you going to say, Mike? Just focus on this and screw the rest.
So you have to. So I work with a firm called DFJ now. We're out of the Silicon Valley, 31-year-old venture fund. We've organized well over $5 billion in venture assets. We've backed companies like Tesla, Skype, Baidu, Box, a number of others that you've heard of. 9 portfolio companies here. But what you have to understand, we have a really narrow aperture. Okay, well, there's a particular profile of a company that we're looking for, and I try to communicate that. I think if I could. First of all, venture capital is not for every business. And it's not for 99.6% of businesses, right? For this very small percent that it is right, where it's a perfect financing vehicle, but it isn't right for everyone. And secondly, to entrepreneurs, I try to communicate that venture capitalists have a business model too, right? We also have a business model, and I try to communicate that so that you as an entrepreneur understand that, and you say, okay, if I'm raising venture capital, I'm buying into that model. That model. Yeah.
Why don't you give us a quick synopsis of that model, because most people don't understand that model.
Yeah.
Like it's not that it's complex or super complex, but that's the model you work under.
Yeah. And I don't think it's that complex really. In that, like an entrepreneur is trying to raise $2 million. Not a crazy amount of money. It's not 20 million. It's not 200 million. It's 2 million. Okay. So when I'm being pitched on an opportunity to invest $2 million, I think one thing that the entrepreneur doesn't understand, and I didn't understand in my first few startups really, was that the venture investor translates that $2 million ask into 20 million in there, because they need a 10x because of all the mistakes we make, right? Sure, yeah. So when the entrepreneur says, hey, I need 2 million to get to this outcome, then we as investors say, okay, well, that's 20 million, and so based on the deal that I might strike with you, so let's just play this out. So let's say, their valuation. So they're saying, I'm looking for 2 million on 6. Let's say, okay, yeah. Okay, 25%. And so I go, okay, wow. So I have to see this company exit at 80 million in order for me to get my.
Just break even.
Because I'm going to make a bunch of mistakes, right?
Yeah.
And then I think to myself, the average successful exit. Successful exit is not even 80 million, right? So I'm really having to, there's a bunch of things that are going on in my head saying, do I think this company is really going to go to the moon, really? Because that's where we make money, that's where entrepreneurs, make money as well. But that's what our business model is really predicated on, these kind of, outliers, black swan events, whatever, however you want to call them, but we're trying to invest in that narrow set of outcomes.
And I think that's the thing that many first-time entrepreneurs, or maybe even second-time, don't understand, that it's not that they're saying no to your idea, it's saying no, that it doesn't fit my business model.
That's right.
Right?
That's exactly right.
The business model doesn't fit. Like your company's maybe going to be 20 million on a good day.
Good, yeah. And,
there's nothing wrong with that.
Nothing, that's amazing. That's a great outcome,
Exactly.
right? But if it's 20 million and it sells for 80, then you have to get to 20 for me to break even, right?
Yeah.
And that's what I'm trying to assess. And of course, break even isn't what we're trying to accomplish.
No one wants to break even,
yeah.
but in essence, that's the game.
Yeah.
Well, so Bill, where are the things that you again see a lot of deals? You see probably as many deals as most in the city. Where are you seeing things that are interesting to you? Not just DFJ, but like, where does Bill think here's some interesting things that's going on?
So I'm not thematic, okay? I don't. So the thing I am really investing behind entrepreneurs, and we back like famously Elon Musk's 3 times, and that's the kind of person, if you've met Elon or seen some of his TED Talks or whatever, he's super charismatic. He's on top of the details. He inspires people to join his cause, all those sorts of things, and that's what we're looking for in the entrepreneurs we're backing, is somebody that can outline a fairly ambitious goal with a kind of realistic pathway to getting there. No certainty, but
Yeah, there's never certainty.
Yeah.
And where are the where are the things that you think are really risky?
Yeah.
Just like
really,
marketplaces are risky because you got two
Yeah,
sides.
right.
It's tough to be successful on 2 things at the same time. Like what things like you're just like that's a tough road.
Well, I mean, but see, we invest in hard things, okay? Because if you can figure it out, you've got this defensive moat, because it's really hard. I mean, we just announced yesterday, I'll just use this as an example, we invested in a company called Pro.com.
Sure.
And Pro is a bit of a pivot. We don't generally back, sort of restarts, but Pro is a restart. It started as a marketplace, local services marketplace. It evolved about 18 months ago into a full service, end-to-end virtual general contractor business, because the founders appreciated that they weren't solving consumer problems by putting them in touch with a service professional to do the job. You didn't have responsiveness, transparency, high quality work. You had to, the Pro had to evolve to actually do the contracting work with its own curated set of subs and building a bunch of software to manage the whole process from first touch to project sign off. Super hard business because lots of details, challenging margins, and all that. But this is two founders are longtime Amazon, and as I got to know them, they shared a little anecdote from a very senior, Amazon exec, and he said, we at Amazon love to work on the hard problems like logistics and fulfillment, which is miserable work, because nobody else wants to do it. And if we figure it out, we've got this incredible defensive barrier. And that just resonated with me. Like, this is going to be a super difficult business to operationally scale. You got to go in market by market, every geography. But if we can get it right, we've got this massive $400 billion market. So I would say that I want to hear about really hard problems, because if you've got a pathway to figure that out, that's a venture kind of return.
That's a deal for you guys. And where do you think You know, how much time do you spend down in the valley? Do you spend much time down?
No, I go down, three,
4 times a year?
three or 4 times a month. No, oh yeah. I mean, the valley is somewhere close to, 70% or so of all venture activity, period, right, across the U.S. So we're generally kind of 5th or so, 6th in the U.S. So I've got to spend a lot of time in the valley. I've got 2 portfolio companies in the valley, 5 here in Seattle, 1 in Portland.
And what do you think is the difference? Why do you like Seattle versus the Bay Area? Like, why do you? I mean, I know why you live here, but what is it that you like? It's just I like Seattle because of X, Y, Z, and I.
Well, yeah, my wife's a 4th generation Seattleite. Family moved, to before the turn of the century, last century, right? So,
Getting her to move was probably not.
Yeah, not going to happen. So if I wanted to watch my children grow up, I was going to be here in Seattle. But there are advantages to Seattle and to the Bay Area. I mean, the Bay Area tends to have sort of more chest thumping, entrepreneurs who are really trying. It's very competitive. It's the thousands of startups down there. You've got to be kind of a little bit out there and really audacious to get yourself noticed and build a team and get venture backing and all of that. So the companies tend to have I'd say a little more urgency than Seattle. Seattle's a lovely place, nice place to have a startup, but I don't think maybe the pace sometimes is definitely it's different than the Bay Area. On the other hand, you get a little more loyalty factor. You get it's a smaller community, so you get to know each other, easier to triangulate on people, and so.
And where do you think we'll be in, say, 3 years, Seattle? Where do you think it just? I think cities.
Well, and this is one of the other things I love to talk about is that you have to appreciate. I suspect I'm one of the maybe 2 or 3 oldest people here in this audience, right? So the people who are coming into this market just do not have an appreciation for what Seattle looked like when I started in 1988. At the time, the major employer was Boeing. We had 3 venture funds, none of which exist today, right? We didn't have there were no startup attorneys in town. We had Perkins Coie that was doing Boeing's work, and that was it. I mean, you didn't have Wilson Sonsini, you didn't have Cooley Godward, you didn't have Fenwick and West, there were literally like 30 to 40 people who were interested in technology startups at the time. That was it, okay? They all came together periodically, and you'd see them all, and you could keep track of everything that was happening in the Seattle community, okay? And really hard. No angel community. Angel investing started in the sort of late 90s here, right? So there were the few angel investors who were around were kind of real estate developers. Yeah. So, so the angel community didn't exist. There weren't, mentors and peers that could help you. No non-existent venture community. Just getting incorporated was hard. So when I hear entrepreneurs talk about how hard it is, I've got like very little sympathy, right? So it's like you don't know what hard is. I mean, I remember for several of my early startups, I would meet with 120 investors, right, to just scrape together a little bit of cash. So we've been on this amazing trajectory, right? No one could have anticipated that that the Microsofts and Amazons and Expedias and Costco and on the retail side, Starbucks and all of that, but all of the the tech startups that have filled in over the Concurs and Tableaus and so on and so forth would have sprung up, and so so it feels like we've hit critical mass for sure. We've got more sort of software developers, core software developers here in Seattle than in the Bay Area. So, it feels like all the cloud giants are here. So you got to think that Seattle is going to be an amazingly great place. Now, what would really help the startup community is, for Amazon stock to take a 30% pit and stay there for a year. That would peel out a lot of talent, I think.
Yeah.
That would help. But you know, thank God Amazon decided to come here, because it's definitely led to a lot of attention on the community. So you know, 3 years from now, I really hope that we have another sort of 5-ish, 3 to 5 public technology startups, and you know, a bunch more that are kind of getting to that stage.
Yeah. And do you think that we have the necessary, I want to say infrastructure, but that's not the right term. It's more like the human capital. Do we have enough human capital? We got a boatload of great engineers.
Yeah.
Do we have enough leaders?
Go to market.
Yeah, do we have enough marketing and the other stuff that has to happen? What do you think about that?
Yeah, so the talent imbalance, so there are a lot of, you know, if we compare it against the Bay Area, you know, it's sort of like 5 to 1 or something like in that range on the business side of the house, not on the technical. Yeah, non-engineering. I mean, we no problem hiring really high quality engineering talent here, but when you're talking about your, you know, SVP of North American sales, or your, you know, CMOs or CFOs, that sort of thing, we definitely need more of them for sure. Yeah, yeah.
And where are we going to get those guys? Are they just going to grow?
Well, I think they're going to come from, you know, look,
and
I don't, you know, I don't know the, you know, the executive team here at OfferUp that well, but you know, 4 years from now, maybe they're a public company, and 3 of them decide to go, you know, do something else, right? So I think that's where it's going to come. Is that it is that recycling. That's what you see in the Bay Area, and you do one, and you know, you want to do another and another, and so we've got to get a few more. You know, over the last few years, we've seen a couple of IPOs, right? Redfin, Impinj, Zulily. I mean,
a few years ago. Yeah.
Tableau a couple years ago, yeah. And you know, we need more of those for wealth creation to happen, and leaders to emerge out of those companies and spin off to join some other, you know, up and coming startups. So.
And like in your opinion over the years, what have you seen come out of Seattle that's been a surprise? Like what's some things you've seen like were just kind of a surprise for you? Because I mean, again, you have a perspective that many don't, because you've been around so long.
Yeah. No, it's another nice way of saying you're really old.
I didn't say you were old, Bill. I didn't say that.
Yeah.
So what are some things you've seen that were surprising to you that you just, you know, OfferUp is a surprise to many people, right? So like, what are the things have you seen as surprise in the Seattle area over the last, you know, say 4 or 5
Well, I mean, look, on the large company side, I mean, AWS is a surprise. I mean, and if we didn't have that, I don't know, you know, what the Seattle community.
That's what makes sense to start a company, AWS, you know.
Yeah, absolutely. Yeah. But I mean, all of the, you know, it's just like, okay, they are the cloud leader, and now, you know, Azure is investing a crap load to catch up, and Google will be right behind them, and they're going to buy a bunch of startups, and they're going to, you know, to catch up. So, so that you know, who would have guessed that the dominant cloud provider would come out of an e-commerce bookseller, right? Yeah, you just wouldn't have, you never would have thought that, right? So that's definitely been a surprise to the upside. In terms of other, you know, startups, I mean, certainly OfferUp's a kind of a you know, unique one out there.
Yeah, quite. And where do you like, where do you want to spend your time the next 3 years? Like, are you just going to kind of keep your head down? What's Bill Bryant going to do?
You know, I'm at a place where, you know,
you have been around a while. You know?
I have been around, yeah, and I don't want to like invest in the next like you know, enterprise file sharing company or something like that. I just don't want to do that. I just, you know, I want to invest in super thoughtful, sort of new ideas. I mean, I'll use Zelf as an example. I mean, I'm not a healthcare investor. I've never done a healthcare deal. But, you know, this whole idea of providing a digital care platform that allows physicians to prescribe To just step it back, so EMR systems can do basically three things. They can refer, so a physician can refer to a specialist, they can order lab tests, and they can prescribe drugs. Those are the three things that EMR systems do because they're designed, and the main one is Epic, and it was written in 1979. Okay, yeah. So, it has no knowledge of digital health, and I'm talking, a Fitbit, or a CPAP machine, or video, or content, or an app of some sort. I mean, it has no knowledge of that. So, in order for a physician to prescribe a smoking cessation plan, it's just a massive amount of work for that physician. They don't do it. The patient doesn't, get on that plan and all that. So, the idea of integrating, there are now like 1,200 digital health offerings into the physician's workflow was really interesting to me, and I wanted to back that just for what they're trying to accomplish as well as the team. Yeah. So I'm looking for projects that are kind of, super odd. Yeah, a little orthogonal to, what's been out there. Yeah.
Yes. Don't come bring the next parking lot app.
Yeah. Right. Yeah. Yeah.
And from a from an entrepreneurial standpoint, where do you think you would be spending your time if, let's just take yourself back 30 years, where would you, if you and I were starting a company next month, where would you spend your time? What would you be working on? What would Bill be working on if you and I started a company?
30 years ago, yeah. So we're talking
but
1987.
I mean, it's today. But let's just say you were 30 years younger. Yeah. But it's today. It's 2007.
Pre-internet.
Yeah, free internet.
Pre-internet. Yeah, free internet. Yeah.
What would you be doing?
What would I be doing?
Yeah.
I'm trying to place myself back in that time frame, and I think to myself about my wife was fortunate to be early involved in the cellular industry, which started here, by the way, and with Craig McCaw and all of that, another great entrepreneur who contributed to the Seattle economy. And I think I would have spent a lot of time. It was such an incredible experience, even in I think she joined in 1986, one of the cellular operations here, something like that. And I remember our first phone was massively big, but it was still such an amazing experience to be able to make a call from wherever you were, right? And I probably would have tried to trying to extrapolate where's it go? Where does it go? Yeah, really spent time thinking about that, because you think about miniaturization and faster processors and better connectivity and all of that, and you could have probably thought about, okay, it's only going to get better and better and better, and where does that lead? So I would have loved to have invented the smartphone, right?
Exactly.
Yeah.
I think anyone in this room would have been on that.
Yeah.
Team. And I think actually
I do have so my last startup before joining DFJ was a company called Mixer, and we had created Snapchat, but on a feature phone. Yeah. So in 1995, or 2005, sorry, so 2005, we had on a feature phone, right?
Pre-iPhone.
Yeah. So oh well.
So what phone
bad
was that?
Timing.
Was that?
That would have been a little clamshell Motorola
device or
yeah. Or
did it work on BlackBerry?
We did not work on BlackBerry, but yeah. And it was black and white screens and all of that. It was all grainy, but it was we could send photos. It was pretty cool.
That's awesome, man. So where is the the need for I think one of the things you just touched on about taking a step back and kind of looking ahead and think, where could that go? Mm-hmm. Where could this thing go? I think that's something that many entrepreneurs rarely do, because they're buried in the weeds.
Yeah.
Right? They're trying to do whatever the thing is. So it's hard for them to kind of take a look back. The really brilliant ones just do that naturally.
Mm-hmm.
How do you coach someone to do that?
So I would tell an entrepreneur that whether they're trying to do something ambitious and large or scoped and small, it's equally hard.
Yeah.
And in some ways, it's easier to do something larger because that attracts capital and talent. People want to work on, how do I get to Mars, right? I mean, it's a big goal, right? And it's an inspirational goal, and so again, using kind of DFJ kind of portfolio companies as examples, I'd point to a company called Remitly here in Seattle. The entrepreneurs, he's just got this massive vision around transforming how $600 billion gets transferred from immigrants, mainly immigrants, back home. And it was like, it's 8.5%. It takes days to weeks. It's many times doesn't get there. There are lots of problems with the whole process. And he entered Techstars back in 2012 kind of time frame to address that problem. And it was a massive, massive problem. And he just it's going to be super hard because you got to get licensed in every state. You've got to establish cash pickup points on the other end. You've got to create an app, obviously, and marketing, but you've got to go through amazing amount of KYC and compliance and anti-money laundering type things because governments want to know who's transferring money to whom, right? So really hard business. But he thought, look, I want to 45 billion in fees gets generated in that market, and his goal is to bring that down to like 10 billion, but own like 70%, right? That's his goal, right?
Yeah.
So it's an inspirational goal, and it attracts highly talented people who say, that's something that I could get excited about and put my shoulder behind for the next 5 years. So, it's not that I mean, there's a place for every startup, and I want to honor that. I mean, I'm not trying to denigrate any startup activity that we call it lifestyle or whatever, and that's great. I mean, I want that to happen because my theory as a venture capitalist is if I want to let 1,000 flowers bloom because maybe one of them wants to grow up to be an oak tree one day, right? And I want to invest in that one. But I would say, before you, it's a hard journey, whether it's small scale or large scale. So before you say, oh, this is a really great idea, stop, think about it, and think, is this something I want to devote the next 10 years of my life to? Because that's the average time it takes to get to a positive liquidity event. And so I would, tell all of you, if you're thinking about startups, think about doing something maybe a little more ambitious. It's a harder road, perhaps, but it does attract, as I say, talent and capital.
Yeah. Where do you give us a story of give us an interesting story that you experienced over the last 2, 3, 5 years that how you met some entrepreneur and that actually, I don't care whether it worked or didn't work. Give us an interesting story how he actually met you, she or he. What was a good way that they got in touch with Bill Bryant? I mean, you're pretty out there. You're not that hard to find, but still,
I'm trying to think of the companies I've been involved with of late that if there's a super, not a DFJ involvement, but more of a personal angel involvement back when I was still doing that. There was a uniquely talented entrepreneur by the name of Kevin Merritt who in 2006 timeframe reached out to me to he wanted to get to know me and just to share some thoughts about what he was contemplating, and he didn't ask for any. There was no ask. Sure. I mean, it's like he had been a successful entrepreneur before. It's like I'm backing this thing, but I need somebody. His learning was that being a CEO was super lonely, which it is, and he just wanted somebody to dialogue with. Sure. When there were critical decisions that he needed to make that maybe he didn't want to expose necessarily his team to or his board to, but just somebody to kind of bounce ideas off of. And I thought, okay, well, this is kind of interesting. I mean, it's.
I guess I can do that.
Yeah, well, and it's evolved into a 11-year, 10-year relationship now. We're super close, and I think if all of my relationships with CEOs were like Kevin's, that would the world would be a good place. But we've evolved to this, and it's something I would tell a lot of, especially tech entrepreneurs, if early on, finding somebody as a mentor, advisor, somebody to just, you don't want to have the internal dialogue going back and forth in your own head without somebody being a backstop and just, reflecting and saying, here's what I hear you saying, and here, have you thought about this or whatever. So that's probably an involvement that was a little bit unusual for me.
Yeah. And talk to me, and we briefly spoke about it, just because it's a topic that, I still get asked to do stuff about it and talk about it. Is talk to with the diversity issues that we have, the Uber thing. All the stuff that's come around over the last Dave McClure. All this stuff has just come flying at us. What is your thoughts on that? Obviously you guys are very diverse. Like you said, you got many women that are on your board and partners, and it's not like you guys are not. But take a look at that bigger picture. Kind of tell us your kind of take on the bigger picture.
Well, so on diversity issues, I think they're certainly at the forefront, as they should be. I think the industry's got to change in a lot of ways, and DFJ, we do have 2 of our 6 partners are female, and we're very active in promoting diversity in the workforce and on boards. I think where we stop short, though, is, and I was asked recently to speak on this issue, was investing in diversity. And I said, oh, geez, I don't know that I can, I would tell you that we don't invest in diversity. We invest in the very best, most ambitious projects, and I don't care who they come from. I just couldn't care less. We're kind of gender blind and race blind and religion blind, and just bring it on, age blind. So it's just I couldn't, as a professional investor and with a fiduciary responsibility to our LPs, who are primarily pension funds and retirement funds and whatnot, we have an obligation to try to find the very best projects. So we don't have a thesis around investing. There are Jonathan Sposato. Okay,
absolutely.
He said personal money. It's I invest only in women. Okay, good for him. Great, awesome. But I think as a institutional investor, and that said, there are institutional investors who have been set up to invest just in primarily female and some minority initiatives as well. But we do not have that as a stated policy, and so.
You just like you say, you got to find the best. And
we've got to find the very best, and we just don't care. Now, I would tell you that I hope that that we see more projects that are women-led. We don't have enough female entrepreneurs in our portfolio. I think in our most recent funds, in the last couple of funds, it's maybe 10%. And it shouldn't be that. It should not be that. But I don't think it's because I know it's not because we have filters that say, we don't. It's a woman. We're not going to invest in it.
Feel free to bring up some questions, guys.
I just have one quick question on that. This idea that fiduciary responsibility prevents you from introducing diversity into your portfolio, isn't that part of the problem? In the sense that
why is that?
People believing that women-led companies, minority-led companies are necessarily of lower quality. It's just
I didn't say that. We don't have that bias coming into it. We're going to invest in the if a female had brought us, Tesla, we would have invested in her. But it happened to be a man. Okay, so no, I just kind of reject that. I don't think it's, we don't have a belief that the projects that we do invest in females, just we don't see enough females who are bringing us these kind of very ambitious, visionary, large-scale ideas that we invest in. Okay, that's our model. Other investors may have some different filters.
Mm-hmm. And what do you think is driving that shortage?
I have no clue. I don't know. I mean, there's a lot of systemic, societal. I've got 2 daughters, 2 boys and 2 daughters, and I see it, but it's probably it's somewhat the early choices that are made in education that lead to downstream choices. It's the roles that many females find themselves in, more marketing and HR and maybe softer skilled kind of roles, and not necessarily in the kind of product and engineering roles that are going to give them the skill sets to conceive of the big ideas.
That's a tough one. I mean, there's lots of there's lots of right answers. There's lots of right answers for that. Like, there's many right answers, but many answers that we can't even say that are right. Kyer?
Yeah, it's just a follow-up to that. Do you think unconscious bias and pattern recognition can kind of skew that some? Because men and women are quite different in a lot of different respects. So if you're used, because you're used to seeing mostly men present their ideas and not as many women, and maybe they communicate the ideas differently. Do you think that could play with it?
There's some interesting work that's been done that suggests that there are some unconscious biases that everyone has about how they view presenters and whatnot. I mean, hard to say. I've met 5,000 plus entrepreneurs, and when we see many deals every week, there's never been a time where we said, we're not going to invest in that one because it's led by a woman. I mean, it just doesn't happen. So but there's no doubt some kind of long-term kind of training that happens where maybe men are more out there and confident and like we're going to conquer the world, and females have been taught to not be that person because they'd be seen as bitchy and to whatever. So there's no doubt that happens. I don't think in our fund, at least, it has never been a scenario where the gender of the presenter played any role whatsoever. I would reject that.
Go ahead.
Hi Bill, my name is Artie, and I'm wondering across which rounds do you invest at DFJ,
Mm-hmm.
and which metrics do you look at depending on the round? So
Yeah.
I'm saying starting with the seed,
Well, that's a good question because and it's relevant to this audience. So there was a time, certainly when I started with DFJ, where DFJ was an active seed investor. So 10 plus years ago, we cut $250,000 checks, $500,000 checks, $1 million checks. That has completely changed, and it's really the result of the emergence of micro VCs, seed funds, super angels, crowdfunding platforms, accelerators, and so forth and so on. There are now close to 200 micro VCs, and they have really usurped the role of providing that first, sort of 500 to really as much as kind of 5 million in capital. We've recognized that. We do not do the very early stage investing that we formerly did. So, for example, back in 2009, I backed Chef here locally. We backed them with a $2.5 million check. We would not write that check today, that same check. And it's just because we have moved further back in the kind of investment cycle because these other forms of investors have taken hold. So we invest. They are called Series A's today, but they are the Series B's of 10 years ago or 5 years ago. So the companies tend to have raised several million in capital before they knock on our door.
Or at least before you write.
And then on the metric side, it just completely depends on the kind of business. You know, if it's a consumer-facing enterprise or some other harder core tech, it's totally different.
Okay.
I have another question. So you were talking about a $2 million investment. For a lot of firms, that's not enough money to put into a given company over time, right? So
Yeah.
the size of the fund will sort of
Will
help
dictate,
drive
right, yeah,
how
so.
much you need to put into a given company.
Yeah, exactly. Yeah, we're investing currently out of a $350 million fund. We'll invest that in somewhere between like 22 and 25 companies. You can do the math in terms of the dollars per company. Yeah, so we don't, investing a $350 million fund, you can't do that effectively at, $500,000 per investment.
Takes forever.
Yeah. So if you're raising, $1.5 million or something in that range, you're targeting investment funds that are, 20 to 50 million size.
Chris.
Hi. If someone meets your technical specifications and your financial specifications for an investment, so say like you will see 10x over 5 years, and you can see that there's a market for it under the hypothesis that the investor has. What actually gets you from that point? Now, once you've cleared that gate, what gets you to the point where you write a check? Is it the founding team, the charisma of the person who's presenting? Is it the timing? Is all the above? Because it's like once you've satisfied the financial.
Well, you don't find you've satisfied it on sort of on paper, right? I mean, it's just
Yeah.
Venture guys aren't going to invest in that. I mean, on paper, where we're investing in is not based on
Theory.
a theory of if we get this percent and what. I mean, yes, all these markets would sort of pencil out. So we're investing on the basis of demonstrated kind of proof points, which is why we're a little bit later. So in the consumer space, we'd be looking at hundreds of thousands of DAUs, for example, as one sign and engagement statistics around that, the virality of the service and all that. On the enterprise side, we'd be looking for, approaching $1 million ARR, growing by 10 to 15% month over month. So we're not looking at the entrepreneurs' projections that you'll get your 10x.
2% of
Yeah.
the market
Yeah.
means you're going to get $2 billion.
I was just wondering if it looked financially viable from your perspective that this is a good investment. Is there certain intangibles that
Well-
team brings to the table that will either, decide whether you invest in that project or not? And
Well, so all of the investments have to sort of pass a threshold of if this works, it works to an extent that we can meet our financial objectives, okay? And then after that has been met, we then focus on the de-risking that and eliminating the factors that could prevent the company from getting to that place, and a lot of that has to do with team and some proprietary kind of unique advantage to market. There was a company recently I remember that we were chasing that had figured out a way to, for example, co-opt the Microsoft enterprise sales team to sell their product because it was a particularly unique product in a vertical that Microsoft had nothing on, and the field has an Azure quota. The startup comes along and says, hey, we were run on Azure, and they had worked out a relationship with Microsoft where the field was actually getting credit to retire their Azure quota. They had a significant, they had to make the Azure quota in order for them to get their commission, their bonus for the year. That was a unique asset, right? So we got pretty excited about that because we talked to the sales leaders and said, yeah, this is how our enterprise guys are going to make their number this year.
Selling this guy's service.
Selling this other company's service, yeah.
That's great. 2 more questions, guys. Go ahead, Sam.
You talked about the importance of having good people around you, like mentors and advisors. So how has that been important for you specifically in your journey to where you are now?
Well, it was, as I said, when I first started out, there were a number of, sort of 30 to 40-ish people who were interested, and we were kind of our own, therapy group.
Yeah.
But yeah, it was, it was critical throughout my my own personal journey to, engage with people that were, a step ahead of me or had something for me to learn from, and so I tried to, connect with as many of the individuals who are, doing interesting work in the community and doing, talk to, in this world of being people like Geyer sitting back here, talking about, tell me what's going on in the startup world, with startup attorneys and, anybody that wanted to could. There were, I think there were maybe 10 years ago. I don't think we needed it, this kind of group anymore, but there were hops. Oh yeah, so there were more. Yeah, hops and chops. Yeah, hops and chops, and there were more kind of social things that were put together to, not sort of oriented to learning per se, but just spending time. Yeah.
Yeah, meeting other people. Yeah. Last question.
Over all the years of investing, has it gotten any easier for you to say no?
Well, yeah.
Guilty about it?
I don't feel guilty about it. No, I know, and so and the reason is, look, I mean, I say, look, first of all, I mean, we just met. You spent 40 minutes telling me I'm not your expert in this field, but I'm not charging you for the advice. It's totally free. You should value it accordingly. But look, I mean, time is our mutual enemy. Okay, you're only going to be able to work on so many opportunities and projects, and I'm only going to be able to invest in so many opportunities. And I just share that I'm very sort of known in this community for being very upfront. I will tell you what I think about your project and why it works or doesn't work. Okay, and you can do with it what you like. But it's amazing how many people have come back to me over the years saying, that thing you told me, that's what happened. And it's just like there's a lot of pattern recognition that does happen. You just see things. So just to give you one very simple one so a lot of companies will come to me and say, hey, I've got this really great technology, and I'm going to use a channel, an indirect approach to get to market. Okay, now I just told you about one that's working, so rarity. But I would tell you that 99.9% of enterprise technologies do not. And the way I tell it, it's like the desert is really hot. Water is really heavy. Nobody is going to carry your water across the desert. Okay, nobody. Okay, you've got to figure out how to get in front of your buyers and get those first sales. Now, once you've got demand, and yes, there are lots of channels that want to fulfill demand, but channels will not create your first customers. Like any company that's telling me, hey, I've got this thing, and I've just signed this deal with XYZ, and they're gonna resell it, and first year sales are going to be $14 million. And you're like, no way, not going to happen. And I've never had an entrepreneur come back and tell me, you were wrong. That happened. Yeah.
I was one of those entrepreneurs who won a company. Thought I was going to
Yeah.
have a reseller.
Yeah.
Didn't work.
Yeah.
Didn't work at all. Sheila?
Did you properly introduce our guest?
No, we didn't. Because he came up and I didn't want to, I didn't want to embarrass him.
Mm.
Yeah. Because when we introduce guests to people that haven't been to start.
We do the little clap.
We scream and yell like he's a rock star. So
that's right.
Bill's he's a humble guy. So it's kind of I'd rather not do that if I had a choice.
Yeah.
Well, thank you very much for being here.